Welcome to Talk Tickers. We're going to jump right in today because we are unpacking an absolutely blockbuster Q4 earnings report from a bank that, well, just put the entire sector on notice.
So, the stock popped nearly 6% right after the earnings dropped. And look, a move like that is a huge signal from the market. So the real question isn't just, what were the numbers? It's what did the market see in those numbers that got everyone so excited? Let's break it down.
Okay, first up, the big one. Earnings per share, $1.13. Now, you might look at that and think, okay, it beat the Wall Street consensus by 2 cents. That's not a huge deal, right? Well, in this banking environment, which has been pretty tough, any beat, any sign of outperformance gets investors really excited. It just sets a fantastic tone right out of the gate.
And the good news just keeps rolling in when you look at the top line. I mean, revenue grew by 8.6%. We're talking over $2.15 billion. This isn't just squeaking by expectations. No, this is a sign of some serious, real momentum in their actual business.
All right, this table really pulls the whole story together. Look at that growth. I mean, EPS up 36%, net income up 32% year over year. That's fantastic. But the real star of the show here, the number that has Wall Street buzzing, is that net interest margin, or NIM. For any bank, this is like the holy grail of profitability. It's basically the spread between what they make on loans and what they have to pay out on deposits. Seeing that NIM expand by 20 basis points to over 3%, wow, that is the signal everyone was hoping to see.
And here you have it, the market's reaction in plain sight. The stock just rocketed from under $60 to over $63 in a single day. I mean, come on, that's not just a good day. That is a massive vote of confidence from investors. The market is absolutely buying what this bank is selling.
So, the big question is, how did they pull this off? Because numbers like these, they don't just happen by accident. Nope. This is all the result of a very deliberate multi-year strategy to build a stronger, more profitable, and just plain better bank. And it really comes down to a super clear 3-part playbook that management has been executing perfectly. First, they're cleaning house, getting rid of non-core assets to make the balance sheet leaner. Second, they are pedal to the metal on scaling up their premium services, like the private bank and wealth management. And third, they've launched this huge efficiency initiative called Reimagine the Bank. It's brilliant, really. They're optimizing the old business while pouring resources into the new.
And if you're wondering if that strategy is actually working, well, here's your proof. Just look at the private bank. This was one of their big bets, right? And it's already contributing 10 cents to their EPS. That's almost 9% of the entire quarter's profit. This isn't some little side project anymore. It's become a core engine for their earnings. The bet is absolutely paying off.
And speaking of that efficiency push, the CEO, Bruce Van Saun, said something really important on the call. He stressed that this whole Reimagine the Bank thing isn't just about slashing costs. It's about investing in technology to make the customer experience way better. And he's convinced that's going to drive, in his words, real revenue benefits. It's a much smarter way to think about getting lean, right? You invest to actually grow.
And listen, this isn't just some vague corporate talk. They've put a massive, concrete number on this goal. $450 million. That's how much they expect to be saving on an annual basis by 2028. Putting a number that big out there, well, that holds management's feet to the fire and gives investors like us a really clear way to track their progress.
Okay, so that was Q4, a fantastic quarter and a really clear strategy. But you know how the market works, it's always about what's next. So let's turn our attention to the 2026 outlook, because let me tell you, management is feeling pretty confident. And when I say confident, I mean it. Their guidance for 2026 is, frankly, pretty bold. They're guiding for 10 to 12% growth in net interest income, a huge share buyback program, but the number that really jumps off the page for me is that operating leverage, over 500 basis points. What does that mean in plain English? It means they expect their profits to grow way faster than their costs. And that, my friends, is the magic formula for creating shareholder value.
Let's just double-click on that NIM again for a second. Management is saying they think they can get it from where it is now at 3.07% up towards 3.25%. Now, I know that doesn't sound like a huge jump, but trust me, for a bank this big, every single basis point is massive. This margin expansion is literally the engine that's going to power their entire forecast for 2026.
So there you have it, a really strong quarter in the rearview mirror and a very confident forecast for the road ahead, which brings us to our favorite part, the next call. Now, before I give you our rating, just a quick reminder of what we mean by that. When we say a stock is an outperform, that's our highest conviction call. It means we fully expect it to deliver a total return that's significantly better than the overall market over the next year.
So given the solid execution we've just seen, the clarity of their strategy, and an incredibly bullish forecast, we are initiating our coverage with an outperform rating.
So, what's the thesis behind that call? Well, first, we see a clear path to an $80 price target. What gets it there? Continued expansion of that net interest margin and a steady execution on those share buybacks. For the very next quarter, we think they'll come in towards the high end of their own guidance. Now, what's the key risk? For us, it's all about credit. You got to keep an eye on any potential cracks in the broader economy, especially in their commercial real estate book.
All right, and that brings us to our final thought, our little outrageous but plausible idea. You see, for years, this bank has been the hunter, right? They've been the ones gobbling up smaller competitors. But as they keep executing, as they build out this really fantastic private bank and start commanding a premium valuation, the tables could turn. The script could totally flip. Our bold idea is this. Within the next 24 months, the hunter becomes the hunted. This bank could become a prime takeover target for an even bigger player looking to buy that growth.
And of course, please remember this is not financial advice.